Greetings to everyone. So I'm going to be teaching the fundamental strategy, and I believe you guys will learn something very powerful. So now, usually in this strategy, we trade high impact news events. So now the events we usually trade, we have NFP, we have FOMC, we have interest rates. We also have retail sales. And I usually recommend investing.com and Forex Factory. These are websites that have fairly accurate economic calendars. Okay, now let me just jump straight to the strategy. So now the fundamental strategy, it's composed of two powerful techniques. So the first technique, is what we call the compression stroke accumulation technique. Then the second technique is what we call the rejection technique. So I'm going to explain these techniques elaborately, and you guys will see the beauty of these techniques here. So now let me start off with the compression stroke accumulation technique. So now this technique is very powerful. I use it quite a lot. So now basically before a news event is released, go to your charts and look out for a compression or accumulation. So let me just illustrate it. So now, assuming here we had a supply zone, then here we had a compression. So that's our compression right there. Compression or accumulation right there. So now before the high impact event is released, go to your charts and look out for a compression like this. So now usually price compresses towards a decision point. So a few minutes to the event, usually price will be near your decision point or already at your decision point. So as soon as it's released, price most of the time reverses. It reverses after the compression. So basically that's the technique. That's the compression stroke accumulation technique. It's very simple, but very powerful. So I'm just going to go through a few examples so that you guys can appreciate the beauty about this technique here. So on the 20th of January, we had the interest rate decision for the Canadian dollar. So let me just get there. So on the 20th of January, it was a Wednesday, we had, so the Bank of Canada released its interest rate decision. So let's backtrack and we see how the market reacted. So let me get a Canadian pair. So this is a British pound Canadian. So let me just backtrack to the 20th of January, which is right here. So this is the 20th of January, as you can all see. Now, I think you guys are now seeing what I'm seeing. So now here we had a compression forming. So we had a compression, a stroke accumulation. And up here we had a decision point. So now before the event got released, price was compressing, stroke accumulating. So as soon as the event got released, price reversed. So this was a card interest rate news. You can see how price reversed massively. So that's the power of the compression technique. The compression technique, it's very powerful. Let me get more examples. So let me see. On the 4th of February, let me get there. We had the interest rate decision for the British pound. Yeah, so you can all see it there. So the Bank of England released its interest rate decision right there. So let us backtrack and we see what actually happened. So that's the 4th of February. So I'm just going to use the same pair, British pound Canadian. Perfect. So now this is the 4th of February. You can all see what happened there. Now, just see what we have here. We had a compression that formed, and the price was compressing towards a decision point right below there. So here's our compression, stroke accumulation. So you can see before the event was released, price was compressing towards a decision point. So as soon as the event got released, price reversed. So this was a British pound interest rate decision. You can now see the power of compression. It's a very powerful technique. Let me get another one. British pound, New Zealand. Let me go to the 4th of February. The 4th of February is right there. Now look at that. Now here we had a compression. We had a compression, and price was compressing towards a decision point. Now this is the 4th of February. Now just see what happened after the compression, and as soon as the event got released, price just reversed. Compression stroke accumulation. We had a powerful reversal when the event got released. So this was also the British pound interest rate decision. Very powerful. It's a very powerful technique. And it has a very good consistency rate. If you take your time and backtest other events, you'll notice the power of this technique here. So let me just get another GBP pair. Let me see. Yeah, Euro GBP. This one had to be selling. So let me look for the 4th of February. The 4th of February. Just give me a moment. Now look at that. So this is the 4th of February. You can all see right there. So now we had a compression. Price was compressing towards a decision point. Now, as soon as the event got released, price dropped massively. So here we had a compression stroke accumulation. So I think you guys are seeing the beauty of this technique here. Compression stroke accumulation. And I think me and my team traded this. Let me just backtrack and see. That was on the 4th of February. Let me just confirm. Yeah, so it's here, we traded it. So you can see before the event got released, we identified a compression stroke accumulation. So as soon as the event got released, we sold heavily. So that is basically it. The compression stroke accumulation technique. It's very powerful if you understand it. Okay, now let me just wrap up with one more event. So now this was a very recent FOMC. It was on the 17th of March. Let me just confirm that. So we had a FOMC on the 17th of this month of March. So let me see. Yeah, so we had sorry, give me a moment. 17th of March. 17th of March. Okay, I hope you guys can see it here. So we had the FOMC statement, and we also had the Fed interest rate decision. So now this really has caused volatility on the US dollar. So let's just look at a few US dollar pairs and we see what actually happened. So let me get to Euro, US dollar. So let me look out for the 17th. Yeah, perfect. Right here. So now see what was happening before the event. We had some sort of compression there, right? And price compressed towards a decision point. So here we had compression stroke accumulation. And as soon as the event got released, price just bought heavily. So this was FOMC. FOMC. Let me get another US dollar pair, Australian US dollar. You can see on the 17th of March. Now, notice we had an accumulation or stroke compression just before the event got released, right? and price compressed towards a decision point. Now look at that. Look at that. So we had a compression stroke accumulation. So as soon as the event got released, price just reversed after the compression. So that was a FOMC stroke Fed interest rate right there. Let me get more US dollar pairs. It was a powerful event, very powerful. Yeah, so 17th of February, look at that. We had a compression. Price was compressing towards a decision point. So that's our compression stroke accumulation right there. Now just see how price reversed after the event. So this was a FOMC. FOMC. I want you guys to appreciate this technique here, the compression technique. Let me look at US dollar, Canadian. 17th of March, it's right here. Look at that. Look at that. 17th of March, we had a compression towards a decision point. So now the compression stroke accumulation technique, it's very powerful if identified. It puts you in a better position to predict the direction of the event. So this was FOMC. FOMC. I think we traded this one. Let me just verify. 17th of March. Okay, I think it's right here. So basically, we had a FOMC stroke Fed interest rate decision. So we anticipated that XX US dollar pairs would buy and US dollar XX pairs would sell based on the concept of compression stroke accumulation. So now here, before the event, we identified a perfect compression stroke accumulation. So we knew that price would reverse after the event. And as we can see, price sold heavily. It sold heavily. It sold heavily. And that was the trade that we took. So you can see price accumulated. So as soon as the event got released, the market just reversed immediately. So I think I have explained the compression stroke accumulation technique elaborately. It's a very powerful technique. So maybe just a tip I can share on it. So now basically, like if your price is already at your decision point or near your decision point 1 or 2 minutes to the event, just sell at current market price and put a fairly wide stop loss. That is what I can share with you. So let me just write it down. If price is near the decision point or already at your decision point 1 to 2 minutes, 2 to 1 minute to the event. Let me just say 1 minute to the event. Pull the trigger. Pull the trigger. So you can pull the trigger at current market price. That's under the compression technique. Okay, now let me now jump into the rejection technique. So now the rejection technique is very simple. So now the rejection technique occurs in a scenario whereby there's no site of a compression. So now there are scenarios whereby you're preparing for your event, but you're not seeing any accumulation or compression. So if you don't see a compression, just put in your mind that you'll have a possible rejection. So now the rejection technique is built under the concept of unfilled orders. Unfilled orders. So now usually when high impact news is released, the smart money, the IT, or whatever you want to call them, they usually use that window of opportunity to trigger unfilled orders. So now these unfilled orders are usually at first decision points. First decision points. So that's what they do basically. They trigger unfilled orders at first decision points. And after triggering them, they reject. And that's how the rejection technique comes about. So let me just elaborate it. Let me remove this. So now assuming we have a perfect setup here. Let me just come up with a setup. Then there we have a fresh decision point. Then price drops. So that's our supply zone there. So now before the event is released, like maybe 30 minutes to the event, you're seeing no compression, but price is just probably around there. So now that decision point there contains what we call unfilled orders. So we shall be having unfilled orders at that decision point there. Unfilled orders will be right there. So now when the event is released, the smart money will use that opportunity to push price to trigger those unfilled orders, and then price will reject and continue in the original direction. So we shall have something like this usually. Price will shoot up and reject. So now usually we have what we call our rejection weeks. Something like that. So that will be called our rejection. So price will shoot up quickly and trigger those unfilled orders and then reject. And then it will continue in the original direction right there. It will then continue dropping afterwards. After the rejection, price will continue in the original direction. So basically that's it. That's the rejection technique. That is how it works. So if you don't see a compression, there's a high likelihood of a rejection happening. due to unfilled orders at a first decision point. But this technique requires experience. You have to be experienced to trade it. So let me just get one or two examples and then we wrap up. So let me see. I think it was 5th of, yeah, it was a Friday. So now the NFP of February, 5th of February. Let me confirm on the calendar. We had an NFP. We had NFP. So on the 5th of February, it was a Friday. We had NFP. Let me just confirm. Yeah, we had an NFP, the non-farm payrolls. Yeah, so it was on the 5th of February. So let me just backtrack there. The 5th of February is there. Yeah, perfect. Let me just zoom in. Sorry. Okay, so now look at this. Look at this. Now here we had a perfect setup. We had a perfect setup. Now here we had our decision point, right? So now at that decision point there we had unfilled orders. Unfilled orders. So now before NFP got released, we didn't have a clear compression. We didn't have any clear compression. So as soon as, so let me just mark that. We had a structure breaker there. So now before the event got released, price was just playing around here. So we didn't have a clear compression. So as soon as NFP got released, price went up, triggered the unfilled orders, and then rejected. So this is what we call our rejection. That's a rejection, NFP. So that's it. That's basically how the rejection technique works. Price triggers the unfilled orders and then rejects and continues in the original direction, as illustrated here. So let me just get one final example. And I think it was interest rate of New Zealand. It was on, I think, the 24th of February. Let me just confirm. So on the 24th of February, we had NZD interest rate. Yeah, you can see it there. NZD interest rate decision. So let me just use this, Australia, New Zealand. Let me look for the 24th. Perfect. I hope you guys can see that. Let me just get back. So this was the 24th of February. It's right there. So now here we had a decision point right there, along that level there. So now that decision point, they are contained unfilled orders. The decision point has to be a first decision point. So we had unfilled orders there. So now before the interest rate decision was released, we didn't have a clear comparison because price was around here, around there. Price was playing around there before the event. So as soon as the event got released, price just went up, triggered the unfilled orders, and then are rejected and dropped in the original direction. So basically, that's the concept of the rejection technique. Let me just confirm if we I think we traded this Australian New Zealand. It was on the 24th. Let me just. Twenty-fourth of February. Australian New Zealand. Yeah, the setup was here. So now this was the setup before the event occurred. As you can see, we didn't have a clear compression. So what price did, it just went up, triggered the unfilled orders, and then dropped after the event, the interest rate event. So I think I've explained the two techniques, the compression technique and the rejection technique, very powerful techniques. And I believe this knowledge will help you in the future when you're approaching our fundamentals. Otherwise, I thank you guys for being attentive.